Hello, traders. Gary Wagner here. Approximately 1:20 in Honolulu, 7:20 in New York on Wednesday, July 28, 2021. And this is the daily report for gold and silver. An extremely volatile day and strong day for an upside move in gold. We had a couple of events happening, of course, the conclusion of the FOMC meeting, as well as a real chance that there will be a bipartisan bill for infrastructure that's going through Congress as we speak. Most notably, Powell made a couple of statements during the press conference. We'll just go through one or two of them. But the first thing is he does believe that inflation is transitory. He also said, although the Delta variant has definitely hit America hard, each time we have a COVID wave, it seems to affect the economy less, a diminished effect. And that was most interesting. The last thing that I do want to mention is tapering. They did discuss tapering, but they said that they would combine tapering of both mortgage-backed securities as well as U.S. debt instruments at the same time. The market reacted firmly. We saw Treasury yields go down. We saw gold move substantially higher. We did roll over into the December position. We'll talk about that during the show, which begins now. The Federal Reserve concluded the FOMC meeting today, and as expected, they announced that they were going to keep their Fed funds rate intact and the same, which is currently fixed between 0 and 0.25%. They also said that they're likely to taper their asset purchases at the same time. There was a lot of discussion as to tapering the mortgage-backed securities component. However, they said that they would do those at the same time. Gold did react in an extremely bullish manner, up $6.20, with the most active August contract currently fixed at $1,806. However, it is the December contract that will move into the most active position. That is currently up $7.20 at $1,811.20. We did send out a trade alert recommending that we roll over our August positions into December. We'll talk about that when we pull up a couple of charts. We are looking at the most active August contract of COMEX Gold. It is currently fixed at $1,806.60. Let's go ahead and enlarge that. And you can see that right now it is up from the fix or close in New York. It is showing up about $7. However, when we take a look at the range, you can see that in trading today, it traded as low as $17.90, and we are up near the highs, which come in at around $18.10. Our data provider allows us to have what is called a continuous contract, which will combine the most active and then update it as the contract month changes. We sent out a trade alert recommending that you roll over your August position into a December for those trading futures. Of course, those trading Forex, that is a spot market and you'll remain long. But you can see that we are up near the highs, and what we want to do is begin to look at the December contract. We'll go ahead and pull that up. And in terms of our December contract, you can see that we are currently trading at $18.1140, and that puts it up $6.80 from the close of New York. The other thing that's interesting when we look at the December contract, because this is not going to change, is that although we have seen gold pricing challenge the 100-day moving average, we've had consistent closes even during the price decline above that average. That average continues to provide very, very strong support. Our recommendation was to roll over into the December contract, and information about the stops as well as our entry price is on the members page in the proper action section. Maintain your current long position in December gold. Maintain your new stop. As predicted, the dollar did trade under slight pressure, now down for the third day in a row, down 14 points at 92.29.5. And finally, silver had substantial gains today, up about 34 cents. We are currently seeing September silver futures at $25.02. We are looking at a daily candlestick chart of September futures. This, of course, is also using the continuous futures contract. We can see it's currently trading at $25.01, a net increase of about 14 cents on the day when compared to the close in New York. And what I am most excited about in terms of silver is the fact that it is trading over $24.90. This is a different data set than we had been using, starting from the end of March, trading at $23.75, up to this top at approximately $28.90. So the 78% retracement is a key and critical area in terms of the price decline we saw in silver. It actually went a little bit below that, which is a very, very deep correction from this last rally, this being the last rally right here. If we see follow through and higher pricing, there really isn't any technical resistance until approximately $25.75, as well as just above that, the 200-day moving average. So we could expect to see, if there's a continuation of dollar weakness and strength in gold, a nice move to the upside in silver, and it could, in fact, move as high as $25.75 before ever being challenged at all by any technical resistance. You can see these lows that come in, and that was acting as a support point until we had that solid break, this candle right here, and then the subsequent candle. So it might be wise to enter from the long side, but we're going to give it at least one day before we make that decision. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.